RBA rate cut pressure. Inflation drops to 2.1%. What's next? Inflation figures cast doubt on RBA's steady hand. Is a rate cut imminent? A significant challenge looms for the Reserve Bank of Australia, RBA, as recent inflation data threatens to push annual consumer price index, CPI, below their desired target range. The Australian Bureau of Statistics ABS June quarter inflation report has revealed a meager 0.7% increase in the quarter, following a series of tepid gains of 0.9%, 0.2%, and 0.2% in the preceding quarters. While the headline CPI figure stands at 2.1%, the RBA prefers to monitor the trimmed mean, which excludes volatile items. This measure has dipped to 2.7%, the lowest since 2021, sparking concerns that inflation may fall outside the RBA's preferred 2 to 3% target band if the downward trend persists. This scenario would cast a harsh light on the RBA's decision to maintain the cash rate during the April and July meetings, raising questions about the effectiveness of their monetary policy. Lewis Christopher, founder of SQM Research, warned that any quarterly inflation figure below 0.9% would result in annual inflation touching the lower limit of the RBA's target band. If inflation falls below 2%, the RBA will face a public relations nightmare. Failure to cut rates in August could lead to someone losing their job, he stated. As RBA Governor Michelle Bullock prepares to review the quarterly inflation data, all eyes are on her next move. Why is the quarterly data so crucial? The ABS releases an inflation report every month, but the RBA considers it insufficient due to its limited scope, covering only 43 out of 87 expenditure classes. As a result, the RBA opted to wait for the more comprehensive quarterly figures before making any decisions. Economists like Tim Reardon of the Housing Industry Association, HIA, and Dr. Nalini Prasad of UNSW Sydney anticipated the RBA's preference for the official quarterly CPI data, predicting that the central bank would wait until the end of July for the updated figures. The RBA's cautious approach has been met with mixed reactions. While some experts argue that the RBA should act more decisively, others believe that the central bank's conservative stance is warranted given the current economic conditions. A substantial investment in ABS technology and data collection capabilities is expected to improve the reliability of monthly data starting from November this year, allowing the RBA to make more informed decisions based on a complete set of expenditure classes. Will this newfound data accuracy prompt the RBA to take bolder action in the future? Only time will tell. Australia's Q2 inflation drops to 2021 levels. Rate cut expected. Imagine a scenario where the economy is finally showing signs of relief from the grip of inflation, and the possibility of a rate cut is looming on the horizon. This is exactly what's happening in Australia, where the second quarter inflation rate has dropped to its lowest point since March 2021, coming in at 2.1% year over year. But here's where it gets interesting. This decrease has sparked a heated debate about whether the Reserve Bank of Australia, RBA, will cut interest rates again. The latest inflation figures have not only caught the attention of economists, but also raised questions about the future of the Australian economy. As the RBA Governor, Michelle Bullock, noted in a recent speech, the current inflation rate is expected to pick up towards the end of the year and into 2026. However, the big question on everyone's mind is, will the RBA cut rates again? The answer to this question lies in the details of the inflation report. According to the Australian Bureau of Statistics, the most significant price rises in the quarter were seen in housing, food, and non-alcoholic beverages, and health, although a fall in transport costs partially offset the rise. On a quarter-over-quarter basis, inflation slowed to 0.7%, compared to the expected 0.8%. But what does this mean for the average Australian? In simple terms, a lower inflation rate can lead to lower interest rates, which can make borrowing cheaper and stimulate economic growth. However, it's not all good news. The RBA has already cut rates twice this year, and some economists are predicting that the bank will cut rates again in August. But others are not so sure, citing concerns about the labor market and the potential for inflation to rise again. And this is the part most people miss. The RBA's decision to cut rates is not just about inflation. It's also about the overall health of the economy. The bank has to balance the need to keep inflation under control with the need to support economic growth. So, what can we expect from the RBA's next meeting? Some analysts, like those from the Commonwealth Bank of Australia, believe that the inflation reading rubber stamps a rate cut in August. Others, like Mai Bui from AMP, are forecasting 4 more rate cuts, taking the RBA's policy rate to 2.85% by the second quarter of 2026. But here's the thing. The economy is complex, and there are many factors at play. The RBA has to consider not just inflation, but also the labor market, economic growth, and global trends. So, the question remains, will the RBA cut rates again? Only time will tell. But one thing is certain. The decision will have a significant impact on the Australian economy and the lives of everyday Australians. As we wait for the RBA's next move, we have to ask ourselves, what do you think the RBA should do? Should they cut rates again, or should they hold steady? Let us know in the comments. The debate is ongoing and we want to hear your thoughts. Do you think the RBA will cut rates again, or do you think they should hold off? Share your opinions and let's keep the conversation going.